Have you ever wondered how to build long-term wealth? How to make your money work for you even while you sleep? Welcome back, everyone. Today, we're going to talk about an incredible financial strategy that has helped millions of investors achieve financial independence. Dividends investing, building wealth with dividend stocks. To begin, let's define what we mean by dividend stocks. Simply put, these are shares issued by businesses that pay out a percentage of their annual profits to their investors in the form of dividends. These businesses often have consistent earnings and solid financial positions, which enables them to frequently reward their investors with returns on their investments. Stocks that pay dividends present investors with a tempting investment option because they combine the possibility of financial appreciation with a stable income source. When compared to other types of investments, dividend stocks have a number of benefits that set them apart. They not only appreciate in value but also pay out regular dividends to their shareholders, providing a steady income stream. Imagine receiving a paycheck from your investments regardless of market fluctuations. That's the power of dividends. Dividend stocks are like building blocks. Each payment of dividends that you get adds another building block that you can use to assemble your fortune. So, how does it work? Let's analyze it in more detail. When you purchase dividend stocks, you automatically become a shareholder in the corresponding firm. As the business expands and increases its revenues, the corporation will eventually begin paying dividends to its shareholders out of a fraction of those gains. And the amount of these dividends per share might vary anywhere from a few cents to several dollars, depending on the firm and how much money it makes. For decades, dividend stocks have been the primary source of wealth creation for a large number of astute investors. The ability of dividends to compound over time is what gives them their significant potency. You got that right. Not only do dividend stocks offer a source of income, but they also offer the possibility of sustained growth. By reinvesting those dividends, you can harness the power of compounding to enhance your returns. Let's imagine you decide to put $10,000 into a dividend stock that offers a yield of 4% on your investment. You could anticipate receiving a dividend payment of $400 in the first year of the investment. You decide to reinvest that $400 into purchasing additional shares of the same stock rather than taking the money in cash. By reinvesting your dividends back into buying more shares, you are not only increasing your ownership in the company but also allowing those additional shares to generate even more dividends. So, as time passes, the amount of dividend income you receive increases, which speeds up the compounding impact. It's like a snowball rolling down a hill, and as it goes, it just keeps getting bigger and bigger. Let's discuss some additional benefits associated with dividend investing. One of the most significant advantages of investing in dividends is the consistent income stream that it offers. Shareholders of companies that issue dividend stocks get a percentage of the company's profits in the form of dividend payments, which are normally made on a quarterly basis. This reliable income may be of particular use to retirees as well as investors who are wanting to supplement their primary source of income. Investors are able to produce passive income through dividend investing because it does not need them to actively trade or sell their shares. For shareholders who have already invested in dividend-paying companies, receiving dividend payments is automated and does not need any further work on their part. Because of this, dividend investing is a viable choice for individuals who are interested in generating passive income. Significant number of well-established businesses have a track record of boosting their dividend payments over the course of time. When corporations continue to increase the amount of money they pay out in dividends, investors who purchase dividend growth stocks can position themselves to receive a growing portion of that money. This dividend increase may be higher than the rate of inflation, which will assist in the maintenance of buying power over the long run. The possibility of capital appreciation, in addition to providing a source of income in the form of dividends, dividend stocks also carry the possibility of experiencing capital appreciation. Strong and stable corporations that pay dividends are more likely to be well-managed and financially strong, which can lead to an increase in the stock price over time. This provides investors with both income and capital gains, which is beneficial for the investors. Compounding effect: reinvesting dividends through dividend reinvestment plans, DRIPs, or manual reinvestment can lead to the compounding effect. By reinvesting dividends to purchase additional shares, investors can increase their ownership in the company, which, in turn, generates more dividends in the future. Over time, compounding can significantly boost the total return on investment. So, if you're looking to build long-term wealth, consider incorporating dividend stocks into your investment strategy. They offer stability, income, and the potential for significant growth. Remember, it's never too early or too late to start building wealth with dividend stocks. Make your money work for you and start unlocking the power of dividends today. Thank you for joining us on this journey to financial independence. Don't forget to like, share, and subscribe for more valuable content on building wealth with dividend.